Hello and welcome to this weekly market recap for the week ending Thursday, July 3rd, 2025. I'm Tom Bowley, Chief Market Strategist here at earningsbeats.com, and it is a pleasure to be with you all again. Hope you had a really good holiday weekend, and now we look forward to what comes next in the market. We saw the market set new all-time highs again last week. We saw some really good participation in some areas that had not participated as well for quite a while. We've seen now a couple really solid weeks on the S&P 500 being led by transportation stocks. That's a little different. We hadn't really seen a whole lot of strength out of transports the last few years, but these last couple of weeks have been really strong, and I think that sets up for what I believe will be some interest rate cuts coming down the road and a stronger economy. I think that's what the market is looking forward to. We did have Fed Chief Powell last Tuesday morning talk, and he essentially said that the Fed's made a mistake, that they would have been cutting rates, but they thought that tariffs would raise the inflation rate, and then as a result, they wanted to hold off on rate cuts. But so far, haven't really seen anything in terms of a significant impact from those tariffs. But I thought that was quite the admission from the Fed chief, once again, indicating that they would have cut rates if it had not been for tariffs. And so they're still sitting back, they're waiting. We're going to get some more news in the week ahead about tariffs and what, maybe that'll have another big impact on the market. I don't know. We've got some deadlines coming up midweek, and it's going to be very interesting to see how the market trades ahead of that. We also have earnings coming up. Earnings season kicks in here in just about another week and a half. Got some big banks that'll kick off the earnings season pretty soon. JP Morgan and some of the others. Netflix, big report there, not too far. I think less than 2 weeks, maybe 10 days away. So market's going to be turning its attention there as well. And then also after the tariffs this upcoming week, the following week, we've got both the CPI and the PPI report coming out. They come out on July 15th and July 16th, respectively. So the market's got a lot of things to be thinking about as we move forward. And the question is, what it expects. What does the market expect from these reports? And do we look beyond? Do we look beyond and look to the earnings reports and the second half of the year, which could be much stronger in terms of GDP and so forth as potential interest rates kick in? We do have another Fed meeting coming up at the end of July. I still think there's a reasonable chance that they're going to cut at the end of July. I think a lot of that will depend on what happens with the tariffs this week. I think a lot will depend on what happens with the CPI report the following week on July 15th. But if we see some of these trade deals go through and there's a little bit less threat of additional tariffs coming down the road, and then we get another benign CPI report, I think that there's a decent chance the Fed may surprise a lot of folks later this month and cut 25 basis points. We'll see. Also last week, we had non-farm payrolls come out. Non-farm payrolls on Friday. A lot of folks saying that the jobs report was much stronger than expected. I'll tell you, I was looking at it. I really didn't think it was that strong. First of all, we had the ADP report come out on Wednesday. And that was much weaker than expected. We actually had a negative jobs report on Wednesday. And then non-farm payrolls did come out higher than expected, 147,000 jobs versus the 100,000 expected. However, private payrolls came up 26,000 jobs short, 74,000 versus 100,000. And even manufacturing jobs came in worse than expected. There was a 7,000 job drop instead of the 1,000 that was anticipated. So, I thought that the report was just so-so. It was kind of interesting that the job gains were actually made in government jobs. So I'm not quite sure how to read all that. I know that there was a lot of positivity or a lot of talk about that jobs report being so positive, and I'm not so sure I read it that way. There was one really good positive piece of it, though, and that was unemployment rate dropping from 4.2% to 4.1. The market was actually expecting it to jump to 4.3. So that actually turned and went in the other direction. I thought that was a positive for jobs. Anyhow, let's go ahead and jump into taking a look at what happened last week. Transportation stocks like I said, second straight week leading the market to the upside. And look at what's following it. Russell 2000, then the Dow, then the mid caps. And down at the bottom was the S&P and the NASDAQ. So a lot of the growth stocks that had been leading this push to the upside kind of, went to the wayside there a little bit last week, and allowed some of the other stocks that had not been participating as well to jump up. And so I thought that was bullish. We want to see wide participation. We want to see more and more groups participating in this move to the upside. Now, if the money rotates to value and to defense over the course of the next couple months, that could be problematic depending on what other signals are showing. But for the course of a week or two, I mean, I love it. I love to see this money rotating in bullish fashion and including a lot more stocks and industry groups and sectors as we move higher. So transports up nearly 5% last week. Really big jump there. Russell 2000 small cap stocks, have been talking about this group a lot. I think as you see these two groups move, this is one of the signals that's making me think that we might get a rate cut at the end of July, because these are the types of groups that should be moving much more in reaction to possible rate cuts. They're much more interest rate sensitive, especially transports. They're very economically sensitive. So with the economy just kind of teetering, why would transports start jumping like this? I think it's because of the anticipation of rate cuts and a stronger economy down the road. If we just look at Friday, you can see really strong action. The NASDAQ did pick back up again a little bit, gaining a little more than 1% on Thursday. Actually, I don't know if I said Friday, but it was Thursday. Of course, Friday was a holiday with July 4th. But the NASDAQ had a really solid day. Of course, all of the major indices were up, but we did see a little bit of leadership coming back into the NASDAQ area. The volatility index, just wanted to point out, 1.5% drop last week. It is getting close to that 16 level. First of all, bear markets end once you go back to all-time highs. So I'm not really worried about the bear market continuing. But the other thing is the VIX. When the VIX settles down below 16, that generally is a really bullish sign for the market. So I'm still watching that. We haven't quite gotten below 16, but I think that move is coming. If the bears have one hope going into this week, it's that tariffs could take center stage again, especially if some of the trade deals that the market's expecting to get done don't get done. So as we move throughout the week, certainly there's the possibility, depending on some of the news, some of the tariff news coming out, there's certainly a possibility we could get a pullback, but I would look for nothing more than a very, very brief period of selling, if we get any at all. Looking at the various sectors last week, materials led. I've got a couple groups I'm going to show you later in the show that made what I consider to be pretty significant moves to the upside and breakouts, industry groups within the materials group. But just looking at the summary, you can see first off, all 11 sectors were up last week. Again, wide participation. We want to see the S&P 500 not only breaking out, but when it breaks out, all 11 sectors participating in that move. And that's what we saw last week. And if we scratch out the materials, you can see the next three groups: discretionary, industrials, financials. They're all part of the aggressive sectors that we like to follow here at Earnings Beats. So 3 of the 5 aggressive groups right up near the top of the leaderboard last week. So still seeing some pretty good action. Yes, industrials and financials do represent a little bit more value within those 5 aggressive groups, but still any kind of leadership from those 5 sectors, it's those 3: discretionary, industrials, financials, and then throw in technology and communication services. When those 5 groups are doing well, generally speaking, the stock market is doing well. All right, I mentioned transport, so I wanted to show you this chart. You can see coming off of the 20-day test just right about 2 weeks ago, really strong move from 14,700 up to about 16,000, almost 16,200. That's a 10% move over the last couple of weeks. That on the heels of what was already a strengthening group coming out of the April low, I think sets the market up for some potential rate cuts down the road. I think that's what the transports are telling us. So always like to see the transports moving to the upside. I think it gives us a really good idea of some additional strength coming in the S&P 500. Here's a chart of the S&P 500. It's a 12-year weekly chart, and it's one, actually it goes back 15 years, but this is one of the charts that I like to look at in terms of solid leadership to take the S&P 500 higher. So this is a chart that we look at Market Vision, at our Market Vision events beginning of every year. But anytime you see transports break a downtrend or break out to new highs, anything like that, that normally leads to really strong action in the S&P 500. So take a look at what just happened here. Looking back to the fourth quarter of 2024, when transports topped at an all-time high, we were in a downtrend all the way through about these past couple weeks. And now with these last couple of weeks, with this push to the upside, we've broken the downtrend. If you go back and you look at periods when transports have broken downtrend, look at these subsequent moves in the S&P 500. They have been extremely strong. Transports only move up for one reason. They move up because more goods are expected to be shipped. And if more goods are shipped, you're going to have a stronger economy. And with a stronger economy comes higher S&P 500 earnings, higher multiples, and higher stock prices. So I love what's going on with transports right now. And this is why I think it's going to lead to some additional gains in the S&P as we move forward. Currently, looking at a one-year chart, S&P 500 broke above that 6144 high, all-time high set back in February. Really has not looked back, just keeps moving up. This looks less and less like a false breakout and more like a real breakout to me. Let's keep moving. NASDAQ 100, same thing. Had a lot of tops coming across here between about 22,000, 22,200, something like that. We made the breakout about 10 days ago, and we've just continued moving up. Now we're zeroing in, getting closer and closer to 23,000. That would be the first time above 23,000 in our history. If we can get there, that's what I'd be watching in the week ahead. Small caps coming off the 20-day test have been very, very strong on a relative basis. You can see that the PPO here starting to turn back up again, about to eliminate the negative divergence. I see volume coming in on this move to the upside. Like transports, I think it's really bullish to see the small caps going, as I believe it foreshadows rate cuts down the road. Moving on to the S&P 500. Now, this is an hourly chart. And there's still a negative divergence, slight one, on the 60-minute chart here as we move to new highs. Still have not taken out that prior high that we had back on June 27th in terms of the PPO. Price action's broken out, but not the PPO. So we'll see whether or not we get that breakout. If we do, it'll eliminate the negative divergence. I think that will give the S&P 500 the opportunity to go higher. But if we do pull back initially this week and maybe some negativity comes out with the tariffs, this kind of a negative divergence could lead to a 50-hour SMA test, and that would be about 100 points less. So we could be talking about, 1.5% to 2% drop on the S&P 500 if things start to turn a little bit more negative with the tariff talk this week. Just something to keep in mind. I believe it would be an opportunity, if you haven't gotten in, be an opportunity to jump in, because I do think this market goes higher, especially as we move into earnings and throughout earnings season. 10-year Treasury yield on the jobs report on Friday or Thursday. Keep wanting to say Friday. We did see the 10-year Treasury yield jump a little bit as folks exited bonds. I think probably it was just a profit-taking session more than anything else. Yields have been going down. A lot of folks have been buying bonds. Bond prices kept going up. Yields kept going down. And then finally we had the jobs report come out. And I think that was an opportunity for some profit taking there. So I don't think this is going to be any kind of a lengthy move to the upside in the yield. If we do continue moving up, I think the key is still going to be up around 460 to 465 on the yield to the upside. Meanwhile, I think we have a decent shot to go back down to about 390 in time. I mentioned the volatility index at the top of the show, getting down closer and closer to 16. You can see that's been an area where we just haven't quite been able to pierce, but a breakdown on the VIX below 16, I think would just add to the bullishness of everything else we've been seeing in the market. All right, computer hardware. I wanted to mention this area of the market. Let me annotate this and show you what I'm looking at here. But a couple of things I love about computer hardware right now. Number one, you can see that we have broken this downtrend to the downside. You can see this nice little rally here over the course of the last week to 10 days or so. PPO is as strong right now as it's been probably in at least 4 or 5 months. So we're starting to get some momentum, some bullish momentum picking up in this group. And remember, computer hardware, the largest company out there is Apple. And Apple tends to have good runs into its earnings report, and they report at the end of July. So this was a company, Apple, that I talked about last weekend when we had an event. It was a week ago. I said, watch Apple if it gets through 205. Well, it not only went through 205. Actually, we got the hardware. Let me get the Apple stock up here. So if I bring Apple up, you'll see basically the same thing. Downtrend line broken. And here was that 205. See all these tops, these failed breakouts at 205? We finally got that last Monday. We got that breakout, and then Tuesday, Wednesday, Thursday, we had a nice run. Got a little bit of overhead resistance around 214, 215. I don't think this is going to pose a big problem for Apple. I believe we're going to break out, and I suspect that Apple is going to have a pretty nice run over the next 4 weeks heading toward its earnings report at the end of the month. Let me show you the seasonal tendencies for computer hardware. This goes back the last 10 years, and I want you to look at July because computer hardware has been up every year for the last 10 years. 100% of Julys, the last 10 years, it's averaged going up 7% per July, which is pretty amazing. And the other thing that's worth considering too over the last decade is August has averaged going up 5%. So between July and August, over the last 10 years, computer hardware has averaged going up 12% per year. That's a great annual return. And that has happened on average just during the months of July and August for computer hardware over the last 10 years. If you look at Apple, very similar. Last 10 years, Apple's been up every single year in the month of July. And you just saw last week getting off to a nice start. And you can see this is what leads computer hardware. Let me zero in here. Look at these averages down at the bottom. July and August combined, Apple averages going up 13.4% per year over the last 10 years, just during the months of July and August. So this is the time of the year when computer hardware does well, when Apple does well, and we're just seeing technical improvement on the chart. So it's really important to pay attention to that. For those of you that are new to Earnings Beats, first of all, please like our video. Everybody out there, that'll help us in terms of our algorithm with YouTube, try and get build up our community a little bit, and also help to subscribe to our channel. If you want to make sure you don't miss any more of our future shows, if you subscribe to the channel and then turn your notifications on, you'll be notified every time when we start up a new show at Earnings Beats on YouTube. So please do that for me. If you go over to earningsbeats.com, you can scroll down a couple things. First of all, you can start a no-cost 30-day trial, our paid service. 30 days, no cost. You do have to provide credit card. Or if you just want to get some free information, we bring this up every once in a while, but I would highly, highly recommend that you learn more and more about the historical nature of the market. I just showed you seasonal trend of Apple and computer hardware. That's literally like scraping the surface of what we've done, the research that we've done at Earnings Beats over the years. I will give you a free PDF that reveals market trends for the past 70 years. All you have to do is click on this and download it for free. All it requires is a name and an email address. No credit card, anything like that. If you haven't already seen these trends, you really do need to check this out. It'll give you a leg up against a lot of folks out there in the market. I promise you that. Anyway, make sure you check that out. And also, if you scroll down, you can sign up for our free Earnings Beats Digest. Name and email address is all it takes there. Interesting, Monday morning for our EB Digest, I'm going to provide you another computer hardware stock that loves July and August, and even September as well. The stock has been gaining momentum over the last couple of months. I think could be set up for a huge advance over the rest of the summer. And that I'm going to be featuring that company Monday morning. So make sure you sign up. Name and email address, hit that subscribe button. All right, just a couple more things before we wrap up here. I mentioned earlier, materials leading the action last week, and you can see materials right here breaking out to about a 6-month high, maybe a little more than the 6-month high. But that's just the tip of the iceberg, because there were a couple of groups within materials. First one being containers and packaging. Looks to me like a very significant downtrend line was just broken last week. So this group had been under a lot of pressure to the downside. I think that move to the upside is very important. I think the rising 20-day moving average now will provide us some really good support in this space on any pullback. Also within materials, specialty chemicals. You can see here coming up and testing this 1125 to 1130 level. I think this, maybe we pull back a little bit to start the week. But again, the rising 20-day moving average has been holding, and a breakout above about 1130 would be very, very bullish for this group. So the more the merrier, the more groups, the more sectors that we can get that are setting, 4-month highs, 6-month highs, 52-week highs, all-time highs. The more and more of these companies that fit into those categories, the less likely it is that this stock market goes back down again. Nothing more than, your normal 1%, 2%, 3% pullbacks. That's what I'd be looking for. One last thing, I'm going to give you a stock that I thought looked really interesting. It's in the financial area, but it looks like it's bottomed to me. And this is Blackstone Group, which had topped all the way back in November and had gone from $197.50 all the way down to $115 in April. But it made its way back up. I see a neckline right here coming across at about 152. Left shoulder over here, right shoulder over here. We just made the breakout to the upside. And what's really encouraging to me is the strength in the AD line, because we are nowhere near 52-week high, but the AD line has just surged to a new 52-week high. So it looks to me like the stock's been accumulated during this period of weakness. And now that we're getting a breakout and a surge to new AD highs, new 52-week highs in that AD line, I think this is a stock to really keep an eye on that I believe moves higher in the second half of the year. Rising 20-day moving average will continue to be probably best entry. If we do pull back, that's where I would be looking. But I really think this is a stock that does well in the second half of the year. All right, that's all I had for today. Again, make sure you like this video and subscribe to our channel. That would certainly help us as we try to build our community here on YouTube. Thanks so much for watching, everybody. Hope you had a great July 4th holiday. And let's get ready for tariffs and CPI and PPI and earnings and everything else the market's going to throw at us as we navigate the second half of the year. Have a great evening, everybody, and happy trading.